Good morning folks, and welcome to the first Danielcode video of 2009. This is the 11th of January. We have a lot of charts to deal with, a lot of material to get through, so we'll start straight away. This is in the new format. The charts are available in the PDF document to the right of this video on YouTube or at the Danielcode website. That's www.thedanielcode.com. The first chart we're going to look at today is a Forex chart, Australian dollar Japanese yen cross. Now if you don't trade Forex, I suggest you watch this anyway, because all markets trade the same on the Danielcode numbers, and if you learn the technique of trading from the Forex charts, it's just as applicable to gold or stocks or commodities or anything else. You'll see on chart number 1 that we had a T.03 sell signal on Wednesday the 7th of January. For the daily entry, for those of you that are part-time traders, and I know a lot of you are, the sell would therefore have been at Tuesday's low minus 5 or 6 ticks, say around 65, 81, 82, somewhere around there. And you'll see that the market is now down at 63.54, so there's 230 ticks in that trade. And that's just a simple daily entry. For those of you who are more dedicated traders or professional traders, go please to chart 2 and you'll see the same market, Australian Japanese yen cross, but this time it's on a 240-minute chart. You'll see that the bar that I put the red rectangle around is the first cross on the fast stochastic. So we then change to the 533 stochastic for the 240-minute chart, and you'll see the bar with the red rectangle mirrored in a red rectangle on the stochastic. That's your first negative cross. The stochastic has been positive going into that high. There's your first negative cross, and that happens at 2 o'clock. That's the 2 o'clock bar. So for early entries, you would be selling the low of that bar minus a couple of ticks. You'll see that low wasn't taken out. The next bar made a little inside bar. So you now move your entry up 2 or 3 ticks below that inside bar when it is complete. And you'll see then that the sell is then elected. The stochastic is still negative, so our entry is still valid. And then we get a sell at about 67.55, and the market's down now. I can't quite see the number, but it's down a long way. It's a huge trade. The next trade is chart 3. We're again looking at the T.03 signals. I'm trying to just reinforce in your minds how simple these signals are to take. I did have a subscriber write to me over the holidays and say, I just don't get it. Now, if you keep watching these T.03 videos, particularly one that's marked T.03 at the Danielcode website, their simplicity themselves. For those taking a daily entry, you sell the low of the previous day, and that's valid for 2 days. So moving on to chart 3, the Euro British pound cross, the T.03 sell signal came for Tuesday, December the 30th, and that gave us the daily entry. Friday, of course, markets were closed. So on Monday, we then looked to sell Monday's low. Now that wasn't taken out, and because the signal continues for 2 days, you then look to sell Tuesday's low, and that entry came at 96.45. It's now down at 88.84, so there's about 750 ticks in that trade. But I just want to get you clear on that concept that when you get the T.03 signal, if you're not a professional trader, if you're not taking the early entry, you sell the low of the previous day minus a few ticks, and then you do that again for the next day. These signals are valid for 2 days. The next chart number 4 is the Canadian Chief. It's a indication of how we manage these T.03 trades. This sell came on Wednesday the 7th, so you'd sell Tuesday's low minus a few ticks. Tuesday's low was 92,920. Now we don't have 5 digits allowed in Forex trading, so that 92,920 reduces to 92,92. Minus 6 or 7 ticks, you're going to sell at about 92.85 or thereabouts. If you exited on the first profitable opening, that was Thursday's first profitable opening, which is what the Forex model account does, but different people will have different time lengths for their trading strategies, and we're not trying to make everyone a mirror image of the model account. That's just one output of the Danielcode that we measure. But if you entered at the first profitable entry, that was fine. But you'll see thereafter the market reversed, and that's what happens in these markets very often, which is why you need to have this technique that once the market moves away, you have to move your stops to break even. Once you've done that, that's virtually a winning trade. And then when there's significant amounts of profit, take off half your position. Bank some profit. That's what we say in the T.03 model account and Forex model account documentary. So on this market here, even though it reversed after it elected the T.03 signal, there was some part of 185 ticks profit in that trade. Now, if you see 185 ticks profit and you don't take it, that's just careless and stupid. You've got to at least bank some part of those profits as they come. The next chart is gold. It's rather interesting. We had a sell signal on December the 30th. It was elected the next day, and then we got a higher day. Now that's just reinforcing the proper place to have your stops is above the swing high. You'll see if you had your stop above the swing high, your stop wasn't touched. If you're a shorter term trader and you entered on a shorter term chart, you probably got stopped out of that trade. On the Monday morning we had a sell signal in the Huey. Now, those of you who've been following my articles will understand the correlations between gold, silver and the Huey. If we get a signal in one of those markets, it doesn't automatically mean we'll get a signal in the other markets, but it is very highly probable that we will. So, seeing a signal on the Huey for Monday morning should have alerted you to the probability of a sell signal in gold, and that's exactly what happened. That was a decent little trade, went down to the Danielcode support at 835. Now on Thursday we had a buy signal in gold, and you can see that was elected and doesn't look very good at the moment. So it may well move away this week, nobody knows, but if it doesn't, it will be a failed buy signal. Now a failed buy signal is usually a sell signal, and a failed sell signal is a buy signal. That's a common bit of market law. It doesn't always apply, but if we had a buy signal that failed, it would be telling us that this market is much weaker than we think it is. I actually don't think the gold market's weak, and if you move on to chart 6, you'll see that's the weekly chart. We've had a nice strong run up. It went exactly to 891.30, where the Danielcode number was. Good move up. Those of you who follow my articles, you'll see that the anti-trade to gold is the dollar. So if we look then at the chart 7, which is the US dollar index, you'll see that this last rally over the last 8 or 9 days really struggled. It put in a big reversal at the Daniel number at 84.84, 2 days down and then a little inside day. It doesn't feel strong to me. The other currencies that are correlated against the dollar are not acting as if they believe there's any dollar strength. So that's just a feeling I have. It doesn't mean anything. All I want you to do is to continue to follow the T3 signals. But if the US dollar is going to weaken unexpectedly, or weaken again I should say, then gold is going to be very much stronger. So keep an eye for anything you're thinking of gold and silver. Keep an eye on the dollar. That's the anti-trade. You need to know about that. The remaining charts here are just simply T.03 trades that we've taken in the last little period. On chart 8, that's the crude oil chart. You'll see that the buy signal came on December the 24th. It was a hard down day, closed right on its low at the Danielcode number 35.32. Everyone thought it was going to go to hell. The T.03 signal said buy it, and you'll see it was a monster trade up to 50.74 was the Daniel number, just a couple of ticks under. And the very day after the top, the morning after the top, we got a T.03 sell signal, and you've had another 3 days, very nice trade there. The remaining charts are the Dow Jones on chart 9, the S&P on chart 10, and the wheat chart on 11, and I've simply put them there to reinforce what I've been telling you. There's a fortune being made out of these T.03 signals. On the website it shows you what the value of these trades has been in the Dow and the S&P, and wheat I haven't calculated it, you can. It's been a monstrous trade.